25
Hey,
points
Carl.
here from 2,800. If certain things go right, what's the likelihood we cross into that territory?
Look, I think we're climbing the wall of worry going back to the start of the year. I think our view is that fourth quarter was an anomaly, that we bounced quickly. And I think the climb is going to be kind of tough from here. We have a 29.50 target, so 6% to year end. It's going to be a bit of a slog. Getting some relief on trade, I think, would be a bit of a boost. But I think we're going to have to deal with some data slowing, but not drastically so. I think that's what we're looking for.
What's your view on earnings? I mean, I assume the trade resolution would have to make up for a relatively modest picture in earnings growth.
That's right. So we have modest earnings growth. We don't have an earnings recession, which I know is a big worry for our clients and a big topic of discussion. Trade would help. We don't have it in our numbers, so we can't kind of put it in as a boost. But I think resolving that uncertainty would certainly be helpful. And we do think growth should be slowing at this point, but we don't think it should yet be a negative.
Tony, what do you think markets are pricing in right now regarding China trade and I guess now increasingly European trade?
I think a lot of confusion, Carl. I think what most people are worried about is that you got slowing growth, slowing earnings growth. You have a president under investigation. You have potential tariffs with China and now on cars. And you kind of wonder, has there ever been a time where we've done this before? And then the Fed has shifted from a tightening to a more dovish policy stance in pretty short order after really raising rates aggressively. And it turns to 1995. We had President Clinton under investigation for the Whitewater with a special prosecutor. We had the Fed go from tightening on February 1st of 95 to easing by July. We had the data slowing aggressively to under 1% as reported in the first 2 quarters of GDP growth in 1995. And the market kept going. It was up over 10% to start the year. It ended the year up 34% and never pulled back, even though you went into the aggressively slowing growth. And just on the tariff side, Japan was the #2 global economy back then, roughly the same percentage of global economy as China is today. We threatened to put 100% tariff on the top 13 Japanese cars, and I believe it was May of 95, and it eventually got resolved because that had started in 1994, that rhetoric, and it ended and culminated in the early summer of 1995. And again, it was all about Fed policy, not necessarily trade, not necessarily the slowing data. It was Fed.